In this video we cover using the path for intraday trading or day trading. The path essentially is this chart you will see in the analysis channel, which is an overview of the intraday price action forecast for the day ahead. In this case you can see the S&P path for a few sessions ago in August 2018. The map here essentially has various levels and targets that we would expect to see in the trading session to come. It's published daily prior to the market open, usually between 5 and 60 minutes before the cash market opens. And currently we cover the S&P 500, the DAX, and NQ market. Key elements of the path then are an upside target or resistance levels, downside targets and support levels, an alternative path, which is a price structure that price could take, but is our secondary view, and an invalidation level, which essentially is a level that if price breaches that level, the path becomes essentially invalid, and we'd expect price to take a different structure for the day ahead. In this case, you can see S&P traded down to 28.25 and rallied up to the 28.40ish level. Compared to the path, you can see in this case that it was the alternative scenario that S&P followed. We were expecting our primary view of a pullback to 28.13 and a rally up to 28.40. What actually happened is price only pulled back to 28.25 and rallied from there. So there are a couple of opportunities that would present, and the question then is, how do you trade using this path? Well, you would set a buy order initially at the support level shown, and you'd consider scaling in at the alternative path. Bear in mind the alternative could be a lower entry also. So in this case we had a forecast of price to pull back to 28.13. We know that it only pulled back to 28.25, as you can see in the post-match analysis here. But you wouldn't know that obviously before the market opens. So you would go and set your buy order at the support level shown. And as we had an alternative of a pullback only to 28.25, you could consider having an initial opening position of half a size at that level. You would set your profit target at the resistance level, in this case 28.40, and you set your stop loss around the invalidation price. Obviously you need to factor in your position size and risk no more than the 1% risk level that we advise. And you work out relative to the invalidation price and your risk and your position size what that 1% risk translates to for you. And those are the key elements that you'd need to have in order to initiate a day trade. In this case, you would have had half a position entered at 28.25. The 28.40 level almost got hit, but not quite, but close enough that you would consider taking profit at the end of day. Once the target level or resistance is hit, the path is considered completed. And in terms of general validity, each path is valid until the open of the next day. So we need to allow time until the next cash sessions open for the path to complete. In any case, whether it completes or not, a new path is issued prior to the open of each trading session, which replaces any previous path. So the validity of each path is essentially just for that 24-hour period from the cash open on the day to the cash open the following day. And it covers the overnight session too, of course. And that essentially is how to use the path. We hope it's useful to you. Thank you and good luck.